Everyone is in a flood zone. If you take anything away from this, Florida is a flood zone. Everyone's in one. Whether you're in a high-risk flood zone or a low-risk flood zone, you're still in a flood zone. I'm not in a flood zone, they say. I'm in an X-flood zone. That is what is not required to have insurance. My property has flooded 5 times in the last 10 years, and I'm not in a flood zone. That's me personally.
Hey everybody, it's Melanie Thomas here, back with you with another episode of A.S.P.I.R.E, Ask Smart People in Real Estate. So today I have a smart person in real estate who's going to help us kind of just get some insight into what is really going on with property insurance here in the state of Florida. Those of us that are Floridians know it's been a bit of a struggle over these last few years. So my guest today is a almost 20-year vet in the insurance business, worked for many years at USAA helping military families. Now he's working with a different company, but he is definitely personally my go-to whenever I have a need for an insurance client. He is the best in the business. So I am going to introduce you all right now to Mr. Fred Henry of SSW Insurance. Is that correct? Did I get that right, Fred?
Yes, ma'am. Thank you so much,
All
Melanie.
right. Welcome all the way from Land O'Lakes, Florida, Fred. Come on in and talk to me a little bit about what is going on in your world. You and I have worked together on quite a number of clients, and I appreciate you always getting the best deals for them and kind of educating me and them about how to navigate this crazy world of insurance we're in. So tell me right now, what is the biggest misconception people have in Florida about homeowners insurance? 'Cause we hear a lot of, doom and gloom, but what's really going on? School me.
The biggest misconception in Florida, it really is that homeowners think that they're fully covered. And I know that's a kind of shock when you hear, well, I have insurance, aren't I fully covered? If there is a storm, there's a lot more that plays into the coverage. You need to know what's been excluded from your insurance policy. You need to know what your deductibles are. So to just assume that you're fully covered is usually where the mistakes happen. I definitely recommend speaking to your agent to make sure that you know what that is. Full of exclusions, there are simple things regarding storms, rising waters that could be excluded based on how the floodwaters came versus a hurricane causing it.
Let's expand on that one point for a second, because you said rising waters. I've heard people say before about there's a difference. People confuse flood insurance versus a house that gets flooded, like maybe by a bursted pipe, right? So it's like water that came from above and water that comes from below, that kind of thing. I've heard that terminology, like the difference between what is truly covered for flood insurance versus, all right, the pipe in my wall burst and, it flooded in the back of my drywall or whatever.
Well,
What is the
exactly.
difference there?
So with a home insurance policy, a standard HO3 policy, the one that most homeowners would have for their first home, that policy is going to typically cover water damage. And I say typically because there are some carriers in Florida that if the home is of a certain age and the piping has not been replaced, they limit those coverages to only 10,000 or they exclude them altogether. And most of the time, lenders won't accept a policy that excludes flood altogether. Broken water pipes. Flood insurance is a separate contract altogether. That is the rising body of water outside of your home that intrudes into the structure, where your water damage from the HO3 is from a broken water line, a broken ice machine supply line. The hose for a washing machine pops out of the wall. Believe it or not, that can happen. And that could definitely cause some major losses.
Got it. So the difference then, so what about, okay, it's a hurricane, right? So there's torrential rain and then my roof gets a leak and floods my house. Is that different coverage to flood insurance where I live by the lake or the river and the waters came and flooded the street? And is there a difference there? What covers those two different scenarios?
That's a great question. And you really opened up a whole box here. So the HO3 policy would cover your broken water lines through all of their perils, which is only a $2,500 deductible, where a flood policy is going to cover water that intrudes from a body outside of the home into the house, where if a hurricane were to rip off the roof, that water damage would be covered. It is, however, then subject to your hurricane deductible, which is typically 2% of your dwelling value on the policy. Could be pretty pricey, and Lord, we hope nobody's roof get ripped off. That's probably the least of the worry is the water at that point.
Got it. So to your point about people not knowing what's fully covered, right? So that's 3 different scenarios where water intrudes in your house, but they're handled by totally different parts of your coverage, right? So the floodwaters from the river, that's the flood insurance, it's a separate policy, right?
Yes.
And the hurricane ripping off your roof falls under your hurricane deductible, but then the pipe bursting in the wall is your regular policy that covered under your, what do you say it, all perils
All other
deductible?
perils deductible.
Oh,
Yeah.
got it. So people are just walking around assuming I have insurance. It says for flood water damage, and they say, "Well, my house was damaged by the water from the river," and you're like, "No, you're not covered for that." Right?
Well,
Surprise.
and it's hard. It's a hard conversation to have. I urge all my clients to always do a review with me to make sure that everything is what they expected it to be before we get to a storm. A lot of folks don't realize that hurricane deductibles can't always be changed. So they start at 2%, 2% of the dwelling value. That's pretty high. Some others will choose to go with 5% or 10%. 10% is the highest. Most lenders won't accept that. 5% is acceptable, but 5% of 500,000, that gets pretty pricey really quick.
Yeah,
Then people are saying, well, why do I even have insurance? Good question. Because
I
if
would
you're
think
able to
so.
self-insure, then you don't ask those questions.
Yeah, I know there were a lot of people surprised. I don't remember what the last one was, if it was Ian or whichever one that dumped all that water on us, where people got flooded that had never been in flood zones, and they were just looking out, looking confused as to why is this not covered. So yeah, so you would recommend get with your agent or whoever handles your policy and really get a thorough understanding of exactly what things are covered and what is excluded, right?
Absolutely. The
That's
exclusions are the most important part of a policy, whether you have dogs and you don't know if your
mm,
dogs are covered correctly, you should ask. Let's say you have children and you decide to buy a trampoline. Most people don't realize there are only two companies in Florida that will willingly take trampolines with an exclusion of liability. Others will just cancel your insurance if they find out you have it. It's simple. And you think we're in Florida, that's a normal toy for children. Insurance companies don't like them.
no. Well, I hope people would know that by now. So why has an insurance industry in our state been such an issue of late? Like, what is going on with these premiums? Obviously, as a real estate agent, I see this as a problem sometimes with getting our clients approved because the insurance is what knocks them out of their debt to income ratio because it's so high. So, what has changed? What's getting better? Is it getting worse? Tell me where we're at with that because this is a huge issue for people with affordability now.
Yes, absolutely. So we are seeing some of the insurance starting to stabilize slightly. However, it's stabilizing at the rate we're not happy with. And that's what a lot of people don't understand. Insurance is reactive. It's never proactive. So we have to now react to what's happening in the industry, whether it be the cost of goods or the cost of litigation. All this factors into it. And people say, well, I've never had a loss. Well, congratulations, and neither have I. And I love that we're in that boat together, but we're in an ocean full of people that have, and we all have to share this water together. That is where it comes from. And these things cause additional expenses. So insurance companies must buy reinsurance. So when they write so much business, they must then buy their own insurance to insure the business they're insuring. And that's how they keep themselves at the right rates. They then choose whether or not they take some of those other risks. And I always say to my homeowners, because I deal a lot with debt to income ratio with my lenders, because I'm always working hand in hand to make sure that my insurance meets the goals of my clients. But if my lender says, Fred, there's a problem with the debt to income ratio, are we able to do anything? I then will reach out to my clients and discuss it with them and find out if there's anything that's on the policy that they're willing to exclude to then be able to purchase their home. That is a decision they get to make. We then plan to add those coverages back in within the first 12 months. I highly recommend not doing that, but there are some cases where that is the solution to being able to buy their forever home. And we have to work with that. I'm not the boss of their policy. I'm just the tool.
Right. I mean, I've lived that life trying to find a way just to get the numbers to work, right? People don't understand the debt to income ratio. Your homeowner's insurance is directly goes onto your mortgage payment. So the difference between 5,000 a year and 4,000 a year could be the difference in being approved or not, right? As far as when it comes to premiums, right? You and I had a scenario recently where I sent you a client. She had gotten quoted from one of the, I won't name the company, but somebody you used to work for. Um, she had gotten quoted eight to $10,000 or something for her premium, and then you came to me and got her a coverage less than $3,000. How is that happening? How could one company be so far and above what another one would be for similar coverage, or is it similar coverage? How is that even possible?
So it's a great one. It can have something to do with the agent, but likely it's not just me. There are exact amount of questions that you ask on an application for insurance. I have over 55 companies that I quote with, and that gives me the opportunity to see who's coming in better or lower. The carriers themselves put blocks on certain locations, different counties within the state of Florida, because they either have too much risk there or they've lost too much insurance in that location. They've had too many hits on their book of business. So they say, let's slow down. Let's not write there so much. If we are going to write there, it's going to be expensive because our risk is already upside down. So we'll see that filter in. Sometimes other agents aren't aware of how a home was built. I have that knowledge. I spent 10 years in the construction field, so I know how homes and restaurants were built. I use that knowledge when I'm helping my clients, so I'm ahead of the curve. I'm already going to county records. I'm looking at when the roofs were replaced. I'm looking if the plumbing permits were pulled, if the HVAC permits were pulled. All that when you're just asking me for a simple quote on it, I'm going to make sure I know that so we are prepared going forward. Other companies, they're just taking calls and writing quotes. Either you want it or you don't, and they'll move on to the next one. It's a numbers game for them. It's a relationship game for me.
So just so I understand, are you saying that a specific company, when they're looking at loss, are they only looking at the losses that they have incurred, or are you looking at overall, as in that county, how many claims have been filed?
That's a really good one. They're actually starting to put more, I would say, evaluation on the actual buyer of the home now. It used to be where we would just look at how many losses had the home that we're purchasing had. If it's a new buyer, it's not that buyer's fault that that home had losses. Most of the time, the carrier is like, okay, we've had 2 losses, no problem. We've had 3 losses, let's see what they were. One was a catastrophic loss, meaning nature, no problem. 3 losses, they were all water-driven losses inside your home. I'm going to have a hard time writing that insurance if it hasn't been fully repiped at this point. But then now they'll look at the buyer. The buyer comes from a history of claims. That is a direct indication that they are maybe not the best steward of their home yet. They haven't learned. They're maybe going to learn with this home, and they've learned from the last one they're not going to do these things. Studies have shown that if you have history of losses, you will typically have more losses. And they
Wow.
do factor that into the rates as they're considering it, along with insurance history. Just how long have you had it? Do you pay those bills on time? And have you had losses? Those all factor into a risk mindset that could cause you to have a loss you weren't thinking of. So the carriers look into that. It's a very small portion of it, but it is factored in.
Interesting. So, and then you talking about, do they pay their bills on time? Are they factoring a person's credit history as well in homeowners insurance?
They do use a company called LexisNexis. All carriers use them, and LexisNexis performs a soft pull. So they do look at, was the insurance paid or what are their bills paid on time? They do factor that in some because just insurance in general, auto insurance, if you have not paid your bills, you are a distracted driver, likely thinking about what's on your mind because you need to get these bills paid. Now, factor that into a bigger stream of life and home ownership. We've got a lot on our shoulders. If we're having a hard time paying bills, we might not be taking care of the things that are a risk that could lead to the total losses. So they look into that a little bit, not much. And when I do talk about it, a lot of people are like, well, wait a minute, I'm not doing that anymore. And I know, and your insurance will reflect that. They're not penalizing you for it. They're wanting to know what the risk is going to be going forward. That's the only thing they have to use other than your word.
Well, that's interesting. Well, they certainly assess risk on a deep level, I guess, in that way.
Yes.
Um, so that being the case, all right, I've got a quote. You say, my risk is relatively low. What else can a person do to try to put themselves in the best position to get the best premium they possibly can get? Assuming that, they don't have a whole long history of claims or the house doesn't have a history of claims. What else can you do to set yourself up for the best pricing possible?
This is going to go fur. So buying homes that were built after 2002 is really good. Down south of Naples, but 94 and newer, they were already changing the building code structure and the homes were being built different. North of Naples, that didn't really hit until 2002-ish. And that's when they started changing the building code across Florida. And it's increased even since then. But I know that's a strong fetch, but those homes automatically qualify for better credits than the other homes on the market that are older. Simple. If you are buying an older home, if it's been updated and it's got a new roof, asking if they've updated the strapping from the trusses to the wall. Again, not a question many people ask, but there's a company in Florida right now called Third Nail that is adding a single nail to the strapping on your trusses, which then change your trusses from toenail to clips or straps. And those clips and straps credits can save $700 a year off your insurance. I've seen it save a church recently in Denones, Florida. I've seen it save that church $1,500 a year on their church building because they paid $1,500 to get the strappings re-nailed. And now they save that $1,500 every single year. They're literally making money.
So you mentioned the things that if it is an older home, because obviously there's lots of homes in Florida that are
Yeah.
older than 2002 or whatever the year. Is that the year you said?
Yeah, 2002 is our goal.
Right. So for those of the folks in 80s, 90s, 70s, mid-century homes, whatever it is, what are the things that need to be updated? What are those vital components or structural components, whatever that you have to, there's no negotiables on that, non-negotiable. It's got to be updated or else you're not going to get insurance.
For me, roofs, HVAC, water heater, and electric. Those are simple items that as a owner of a home that I'm going to sell, I would expect those things to be top notch. The electrical should be in perfect working order. Plumbing shouldn't have any major issues. If there are, I should be prepared to fix it. And the HVAC, it doesn't have to be new, but it needs to be at least 10 to 15 years newer and in great shape. It is probably our biggest issue we run into. There are more times than not that the roof has just been let go. We live in a society of it's not my responsibility. I just own the house. It is. We have to plan for our roofs to be replaced as good stewards of our homes. And it doesn't, you can't always do it in 1 year. I took 3 years to plan for my roof because my roof is so large on my home. So I never thought I would be spending $50,000 on a roof, but I had to plan for it. And roofers came out and I had a guy that tripped on a shingle and said it was broken and tried to get me to claim it under my insurance. He didn't know that I was an insurance broker. I don't reveal those things when people are doing quotes for me, and he broke my sale. And I had to ask him to leave my property because that is why we are paying so much more in insurance, because I could have used what he said. I could have gotten my roof paid for by him doing fraudulent activities on my roof, and it wouldn't have come out of my pocket.
Yes, I remember that well. So that period, I don't know, what was it, 10 or so years ago, where we were getting all these knocks on our door every day, every time there was a hailstorm, right? And people would say, hey, if you have hail damage, we can get your roof replaced, for virtually nothing and under
Mhm.
your, regular deductible, blah, blah, blah. And I think I'm not kidding. Almost 90% of the people in my subdivision, we have over 1,000 homes, got new roofs. I was not one of them. So when the Hurricane Irma came in 2018 or 2017, whatever, I had to replace my roof under the hurricane deductible. But I know that a lot of those people did not need totally new roofs at that time. And they were doing whole blocks at a time. Like one company would come in. And so do you think that that was a contributing factor to where we are now with the amount of claims that were being placed at that time when the people were like, hey, I can get you a new roof for $1,000 deductible?
Yeah. Yeah. No, that is probably the biggest impact to the cost of insurance right now is all of that went on. And they've taken major steps to stop it. They've stopped some litigation. They've stopped the roof rules. They changed the statutes in Florida on what they can and can't do. They're still doing it. I have a contract in my file that I got last year that specifically outlined the statute rules that you're not allowed to break. So you could sign it and allow them to do that same thing that they were told not to do. And these were documents you're signing before they even did an inspection on your roof. Now, again, we won't name companies. I know great roof companies that don't have to do that. They just do good work and they help people out and they make sure if the roof doesn't need to be replaced, if we can just repair, that is how insurance becomes affordable again.
Okay, so educate the folks of what, these people knock on your door. What is a red flag if a roofer is coming and saying to you, hey, I can get your roof replaced. You won't have to put any money out of pocket or whatever. What are the things that you should be looking at as cautionary, wording? If they're saying sign this and we'll get the money for you, whatever it is, what should they look out for as a homeowner if a roofing company is soliciting you in that way? What's legit and what's not legit?
So a referral from a neighbor because you actually have damage and the neighbor knows that. Listen to that. Maybe that neighbor found a good company and you can do your due diligence that way. You've made a call to have someone come and check your roof. That's important. If you're just sitting at home, somebody knocks on the door, I mean, just ask yourself, how many times has somebody rolled up and asked me if I wanted $15,000, $20,000 for free? Doesn't really happen too often. So if somebody's coming to my door to offer me the most amazing deal in the world, it's self-serving. It's not to benefit me and my family. And a lot of folks don't think about that because folks aren't out here giving away $20,000. They're getting paid and they're doing a neighborhood. That is a big red flag because they've gotten the word of mouth going and they're just hitting every house, whether they needed it or not. Another way you can combat that is have an inspection done on your home before storm season. Know what you're looking
Mhm.
at. Know the condition of your property. Figure out if you need to clean the trees away, fix a broken shingle, make a video of the stuff inside your home before the hurricanes come. That's how we stop these people from coming out and telling us that we had a bad roof. Because if you already knew, then you can compare it with what they're telling you. And then you're like, oh, you're right. I lost 15 shingles on the front of my house. Wow. Or no, what were you doing on my roof? I didn't give you permission to go up there. I've seen that. They'll be on your roof and then they'll come down and tell you they found something because they were next door and they saw it. I'm sorry. That's no, no, no. Please don't access my property without. But there are all types out there. The good companies won't do it.
Okay, yeah. 'Cause what about these guys that say, I had a drone camera and we just went and took some video of your roof and it revealed you had X amount percentage of damage. Is that legitimate or could it be?
It could be, and it really just depends. I have a roofing company that I absolutely love, Hendricks Roofing. I'm going to name drop, but I love them. The young lady that owns it is a multi-generational roofer. They own their own production facility. When somebody that is a name brand comes out and they say, hey, we have a problem. We noticed that this storm hit these roofs. Would you like us to do an inspection? Here's our card. Yes, maybe no. Then you get to decide. But to be forceful and pushy, that's a big red flag for me. Now, I'm a hard sell anyways, so I
Mhm.
have to take that into consideration. But if I didn't call you to my property to do something for me, then we're not probably not going to move forward. Call your inspector. Everyone that bought a home had an inspection done, whether it was an appraisal or an actual inspection. And if you had that done, call that inspector back. They have the most skin in the game to make sure that you're happy with them. There's warranties that come with these inspections that you get on these homes when you buy them that cover damages to the house that they didn't find. They don't want you to make a claim against them. They want to do a really good job for you. So having that inspector come back out that you've already done business with, and then if it's a problem, you reach out to your roofers and you say, okay, now I need to talk to a roofer because I know my inspector told me there was something.
Got it. Roofs are such a big deal here. So a couple more questions on that because I know that this is probably the thing that impacts us the most here in Florida. But what are people assuming incorrectly about their roof? So in other words, if your roof is just old and shingles are falling off because it's 30 years old and you've never replaced it, is that something that is covered by insurance or not? What is the difference between what is covered for to replace your roof and what's not?
So that's a really good question. There is a form now, an endorsement that is on a policy. If your roof is more than 10 years old, you will typically have a stated value on your roof, meaning instead of replacement cost, it's going to be evaluated at the age of the roof. So when you have a new roof put on, the first 5 years is 100% replacement. The next 5 years, maybe 80% or 85% replacement. The next 5 years, even less. We get down past 10 years, we start getting into 25% replacement. And most homeowners don't realize that their policies were written with this. It costs us money more to add an endorsement for replacement cost coverage on a roof. And then that roof has to meet the guidelines. So if your roof is 8 years old and we add that on there, you're paying a little bit more because there's a better chance that you're going to have that loss. I tell folks all the time when you're walking in your front door, if you have gutters, look at the downspouts. If there are pepper, sand, granules, things like that at the bottom of your downspouts, your roof is shedding granules. That means that the tar is heated and cooled so many times that it's just popped off and it's washing away. If you don't have gutters, you can still look at the garden beds around the drip lines of your home. If you reach down there and pick up a little sand and it's not Florida sand and it's granule, it's likely just your granules off your roof. Those are signs to say, hey, we have a problem. If we have a storm, something bad may happen. Now that goes both ways. Some people say, great, I don't have to worry about it until the storm hits and then we'll get a new roof. The rest of us are trying to figure out, like, why am I losing so many granules? I have a brand new roof and I still find them in my gutters. It happens all the time just because of our heat.
Hmm. So, in that scenario, if it was just maintenance or wear and tear, could you have your insurance company could you file a claim for that, or you would just have to eat that?
You would be able to file a claim. They would likely decline it. I'm not a licensed claims adjuster, but I do know that there has to be the actual cause of loss has to be a covered reasons. Your fire, your lightning, your vandalism, your hurricane, your blowing wind, hail, those types of things. But if it's just deterioration, just like
Yeah.
your water heater wears out over time and you have to replace it, those types of things, HVAC wears out over time, you have to replace it. There are a couple scenarios where you can have endorsements added to a policy to cover certain items.
Uh-huh.
Again, it's all about endorsements because it's all about exclusions. What's not included? What's not included is the inherent wear and tear of an item.
Got it. So, yeah, I think a lot of people mistakenly assume that I'll file a claim. No, you won't. You're not going to pay for it. So, one last thing on roofs, because now I see there's a lot of trending towards metal roofs now.
Mhm.
What is there a best type of roof that the insurance companies like the most? We obviously have architectural shingles and we have tile, barrel tile and that, and then or cement slate and now metal. So is there like a primo type of roof that like if you have this roof, you're good for 50, 60 years, you don't have to worry about anything and you'll get, the best insurance rates, or does it differ depending on the whole house itself?
So you're right on point here. The best thing is a new roof, period, no matter what kind. But they're no longer doing just your standard 3-tab shingles. So you're going to have architecturals become the new standard. Most roofs are now just architectural. The clay and tile, if you're going towards clay and tile, concrete is a little stronger, but both clay tile and metal are 50-year roof, and you're going to probably get over 30 years before they start asking for inspections. So you're going to go a pretty long time. If you can swing it metal, if you can swing it and your house is the appropriate house for a metal roof, cool, that's great. It's going to do great it's going to hold up well under the sun. But then with metal roofs come other problems like oil panning. There's little divots around the screws that you can notice if your roof's a steep pitch. So you may not want that. We've upgraded our roof to an architectural shingle with a reflective coating, and we did a reflective secondary water barrier underneath it. And everybody said, well, why did you do that? You don't see it. It matters. The sun reflects even through that second layer, and it
Uh-huh.
makes it less hot in our home. So spending the money where it benefits you the most, an upgraded roof with a secondary water barrier. If you're going to spend that extra money to do that upgrade, if your home's not insulated, then maybe that's not the right reason to do it. Maybe go with a moderately nice roof and then upgrade your insulation too. At the end of the day, a new roof is what you want, and architectural shingles, metal shingles, and concrete tile are great. Clay tile are just accepted.
So another big thing that comes up a lot here in Florida is the type of construction of the house, right? Concrete block versus wood frame. So the perception is that wood frame is less desirable, more costly to insure. Is that true? And if so, why? And then what should someone do if they want to purchase a wood frame house? Is there anything they can do to make that more advantageous as far as insurance costs go?
So the cost of construction really comes down to labor and material. So to do block walls, you're going to have probably 10 or 15 guys laying blocks in one day, and they're going to fill the cells around the windows and doors. And the block's going to be a good, strong feature. The cost of that isn't far off of the cost from doing a wood frame home. A wood frame home has a ton more anchors. And a lot of people are like, well, I'm scared because of the hurricane. With the building codes in Florida and the changes that they've made, the strapping that has to be put on, the anchoring to the concrete slab, from the time the slab's put in and the first board touches the slab, there are anchoring points that hook every piece of wood together with straps with 20 nails going up the walls. So if you ask me safety wise, I love a frame home. I love it. It doesn't really change the insurance cost that much.
Really?
Yeah, I know most people wouldn't assume that, but I love a frame built home. However, there's always a catch. If you're buying a home and it's new construction, you should have a home inspector on your payroll from the beginning and employ them to come out and make sure you know when different things are being certified and done, because you don't want them to go check your plumbing after they put the drywall in. But during new construction, you'll be able to make sure that everything is done correctly. A lot of folks miss this part. They get the home inspector at the end. Then what can he fix? But if he's on the property throughout the whole process, he's able to guide you and say, no, they missed this, or they put a nail too close to this water line and it could be a problem, or whatever the situation is. People make mistakes and the inspectors catch them. So I definitely think that A joisted masonry home, which is going to be some concrete and some wood, whether it be a 2-story home, those are joisted. So your concrete, your first level, your wood on your second level, unless you're near the coast. Those are typically always going to be concrete. There isn't a real big risk either way. And the cost is not that far different. The cost changes once we start adding the amenities. Did we go 3 stories? Is it 3,500 square feet? Did it get 6-inch base and 5-inch crown molding? Are we upgraded above standard construction for this day and age, or is it standard? That's where our numbers really start changing.
So just so I make sure I'm understanding you correctly, you're saying that because I'm thinking that it's always been preferable to have concrete block because it's more secure with tornadoes or what have you. But you're saying that this companies are looking at what is the cost to replace it or rebuild it?
Yes, your entire policy is driven off of the estimated cost of rebuild, not the quality of construction. They already know you're passing the building code or you can't get occupancy. So they don't have to worry about that part. But they are absolutely looking at what does it cost for us to demo, remove debris, and rebuild this home on its foundation that is no longer there or the ground that was there. And that is really where the factors come in. So if you have a much older home, we're not just rebuilding the home that was there. Now we've got to bring it up to code. So that's where more expenses come in.
Yeah, that's interesting. I never thought about it that way, but yeah, I guess that makes sense because that's ultimately what their job is, right? Is to cover and replace in a loss. So what, as far as with car insurance, right? We are all of the habit that we shop that all the time. Like, oh, I don't like this one. I'm going to switch to this one. Can you do the same thing? People seem to think that they're locked into their homeowners insurance every year and they can only change at the renewal. Or how often or do you recommend or should people be shopping different insurances if your premiums start to go up for no reason without any claims or anything like that?
I always say check your escrow statements and see what's criming. Taxes are going to go up every year, it seems like, and then insurance always seems to go up every year because we've had loss after loss. At the end of the day, there's never a wrong time to change your insurance. In the state of Florida, we own our contracts and we can cancel those contracts as long as we have the legal right to do so. And even with a loan on the house, we can cancel a contract. The lender will force place a policy on it to protect themselves and not us. But if you're wanting to know the best time, I would hope that your agent is doing that for you. With my clients, I have a process set up to if my client's insurance goes up above a certain percentage, then I'm going to be re-quoting them. I'm going to know what's going on before the renewal time comes. I've got 45 days from the time the notices come out for renewals to see what's out there. That doesn't take me that long. It's usually going to take me a day or two, and I'm going to know what's available. Having an agent that cares about everybody's bottom dollar, not just their own, is important.
Mhm.
A lot of folks are just working in a call center and they don't worry about it. They'll get another client. I value my clients. I build relationships with them. So for me, if somebody calls me and they say, Fred, I need to check this, I have a pretty good relationship with most people where I'm going to ask them what's going on, what's happening. Your kid's going to college. Congratulations. That's expensive. What do we need to do to offset that? I'm then going to ask, what other insurance are we working on? We've got home. We can't just take away from your most valuable investment so you can afford tomorrow. What do we got to modify? And sometimes that's modifying their auto policy, modifying their home policy, looking at other solutions. I've had clients raise deductibles. It's their choice, and I'll stand behind them. And I'll call them and I'm like, guys, we've got to drop these back down. You made it a year with no big losses. We got to drop these back down to appropriate because if there's a storm, all the money you saved is going to be lost because you can't fix your home.
Yeah. Are you seeing that as a I mean, I know I've done it. Are you seeing that as a trend that is dangerous now where is it becoming the norm where people are having these higher deductibles just to make the premiums affordable? And
Yeah.
what's the danger that you see in that?
The danger is your home not being fixed. So I am seeing it. Absolutely. I see it so much down south. Thank goodness we're not in Miami, but the cost of homes in Miami, the cost of insurance down there is astronomical. The difference between Miami and Ocala is $3,000 sometimes in cost of insurance. And then they raise the deductibles to be able to afford it, to then be able to buy a house that maybe they shouldn't have bought. Maybe it wasn't in their budget to buy that house, but they needed to live there and they wanted it. And that's where their life was. So they made it happen. And they took these really high deductibles. The hurricane came and the hurricane damaged their home. Flood came, but you didn't buy flood insurance. And the flood that never flooded your area flooded your area. So now we end up with hurricane damaged house. You've got a $10,000 deductible and you barely afford to close on this beautiful home. And now I was part of this scenario that you're in. And those are the hard ones to stomach because we keep files, we keep records, and we discuss these with clients. We send out emails like, are you sure you want to do these things? And they say yes. And then we follow through. But I've seen it happen firsthand, and it's a shame. But it's also about where you buy the home. So, I mean, the same scenario up in Ocala, the same home, much less expensive, but not everybody can move to Ocala. I can't. I've got to live in Hillsborough County.
Can people living on stilts right on the water, can they even get insurance anymore right now? Who's covering those people?
I've got the answer for that one. So I actually have a very good business partner who builds on Davis Island, Treasure Island, Madeira Beach on the
Mhm.
water. He goes in and he finds these homes built in the 70s that are slab on grade, and he buys them and then he raises them. And he raises them to 3 stories. And everybody's like, oh, this is horrible. But he's fixing the problem. The next homeowner will never be flooded again because their garage is the first floor and it's a flood away garage. So there's no damage. It's all concrete. We've got elevators that are raised above so that way there's no big issues. The insurance for those homes to be built, most folks don't realize, is $10,000, $15,000 just to them to insure the construction of it. But then when we go to insure the home, we're like $3,000 to $5,000 in Madeira Beach. That's expensive, but not on a $3 million home.
No. Wow. So there's still hope for me to get my beachfront home, Fred, is what you're
Well,
saying?
we might all have to go in together, but yes.
I'm looking forward that's the thing that would scare me away. I just don't wanna, I don't wanna have to pay $50,000 a year in property insurance. So this is great information, Fred. I think people don't really think about their insurance that much, especially when they have a mortgage, because it's built into the payment and they're not really paying attention to when these premiums are going up until it happens dramatically. It kind of just eases its way up and letting people know you can shop, even, you're not locked into anything. You don't have to wait till your annual renewal is coming up. What last word of advice as we wrap up here would you want everyone to know? What should they be thinking about? What could you be doing right now if you are a homeowner here or even a renter as far as insurance goes? What are the things that should be top of mind for you?
Top of mind for you. This is Florida. Let's always think about storm season. Never stop thinking about storm season because it doesn't have to be storm season for it to come. We just had tornadoes 2 days ago here in
Yeah.
Florida. So it doesn't have to be storm season. Everyone is in a flood zone. If you take anything away from this, Florida is a flood zone. Everyone's in one. Whether you're in a high risk flood zone or a low risk flood zone, you're still in a flood zone. I'm not in a flood zone, they say. I'm in an X flood zone. That is what is not required to have insurance. My property has flooded 5 times in the last 10 years, and I'm not in a flood zone. That's me personally. The other part is hurricane season. This is the time right now. The weather's good. The sun's bright. Go around your property, take photos of the outside of your home, all 4 sides, from the backyard, from the front yard, then go inside and document the things you have. Make a quick video. Save it. It's in your cloud. It's in your files. Save it. So if there is a loss and you come home and that house is gone, you've got documentation. Pay attention to the most valuable things in your home because you need to show proof of ownership. And I don't know about you, but I don't have receipts for everything. And I do this for a living and I still don't have receipts for everything. So when the storms come, we grab out the phone, we go around, we make a nice video of all the expensive stuff and then all the regular goods. I think that's really important. As
That's
far
great
as
advice.
renters go, most renters insurance policies have something called food spoilage. It's really smart to know that going into storm season because if the power goes out and you're out of the house for 5 days and you go back and everything's spoiled, there's usually some coverage in your renter's insurance policy to get your food replaced for free. It's not even got a deductible on it. So those are simple things as a tenant you should be looking at. Tenants should always have their own insurance. Don't rely on anybody else to take care of you.
Great advice there, Fred. Well, Fred Henry, thank you so much for being my smart person in real estate today. This was great information. We could probably have gone on for a couple more hours just to let everybody know all the little intricacies that they need to know. But what you gave today was very helpful and wise advice for folks. So I hope you guys paid attention to that. It is May, so storm season is just a few weeks away, right? So we
Right.
should all be getting in that mindset now. So thank you again, Fred, for joining me today. I hope you guys learned some good tidbits here about how we need to deal with our insurance here in the state of Florida. So see everybody next time on the next episode of Aspire. Remember, I endeavor to never be the smartest person in the room. So today I brought my smart insurance guy in to educate you all. So I hope you enjoyed that. Thanks again, Fred. We'll see you next time.
Thank you, Melanie.